Good evening, friends. My name is THARUN'S. I am your Indirect Tax faculty. So, first of all, welcome for face-to-face classes. So, you might have been into, I don't know about you, but I was so much frustrated taking classes for camera. Now, thank God, I am able to see the students and I am able to take the class. I thought, no, I will never be able to take the class like this. So, thanks for making it happen. Of course, I know that face-to-face classes will be taxing for you because now when you are at home, you can watch anyway. But now a little discipline is required. You have to come all the way for attending the classes, and then next thing is like you'll have back pain also because you are used to sleep and attend the classes. So many advantages were there, but now that will not be there, and you have to run all the way from your office and come for the classes. Little difficulty only, but definitely you will cherish and find a difference attending the face-to-face class over recorded classes. Okay, online live is also to a greater extent okay, fine, because we what happened, some data has been taken from my team that out of 400 students who purchased the Google Drive classes for the last batch, still 150 students did not activate that. You understood what I am talking about? Then remaining 250 students, those who activated, out of that 150 students have not completed. The batch got over and I started another batch also. Okay, so which means that this recorded classes is making us lazy, and moreover there is no time discipline that is being followed. But when it comes to this online live or face-to-face classes, there is a fixed time. So daily our class will start at what time? 6:15 p.m. and it will go up to 8:45. So daily basis little bit of concept will go into our mind. And Sundays, of course, we will stretch a little bit because definitely I cannot complete in 2 months or 2 months 10 days if it is only 2.5 hours a day, because this regular batch, this is a regular batch, this is not a fast track batch, and the number of hours that is required to complete this batch will be 170 to 180 hours. So that many hours I will be taking the class, and I will ensure that I am not telling some crap etc and all. Everything will be relevant from subject point of view only. So because that much is there in the subject, of course, so even other faculties will be able to complete this batch in 90 hours also, in 30 hours also. I am taking rocket revision in my YouTube channel. But end of the day, if you need to have the 100% coverage of the syllabus, so definitely you need to spend that much time. And moreover, so nowadays the type of questions that are being asked in the exam is gradually changing. Initially, in 2018, when it came, 2018 May and November 2018, the paper, if you see now, without attending the class also you will be able to complete that. You will get 50 out of 100. No need to have any GST knowledge, because all questions are direct questions. Only on input tax credit they have tested. So therefore, yes, at that time it was a very, very easy paper. But as it progresses till the latest May 22 exam, I have seen a complete makeover in asking the questions. They have increased the length of the questions, and they try to coin new type of questions covering different chapters. So now the surprise element here is that in the new syllabus, it is going to be an open book system. Yes, there is a plan that DT, IDT and multidisciplinary case study, these 3 papers they want to make on an open book system, which means that it is now important that we need to focus more onto the subject rather than learning important areas and going for the exam. So that should not be our strategy. If that be the case, then it will be called as a fast track batch, which I will be taking for 90 hours. But if you want to learn the subject, plus at the same time see the practical relevance of it, then you should definitely spend that much time, okay? And next thing, how many of you are appearing for May 23 exam? May 23 or June 23, one. All others are appearing for November 22 only? Yes? November 22 only. Yes, sir. You came to learn the subject. Yes, definitely. Superb. And online students, please update how many of you are appearing for May 23. So this batch is primarily for November 22, but I will also be covering some amendments of May 23. So little bit of knowledge really we need. So that knowledge also we need to gain. So I will be covering that, but I will definitely make a distinction as to this is not applicable for November 22, like that I will tell, don't worry about that, okay. But all the amendments of November 22 will be covered in this batch, because as a CA final student, you must be knowing that there is a cutoff date of applicability for your exam. If your exam is November 22, all the updates, changes in the law that may be in the form of Finance Act amendments or notifications or circulars, that will be applicable to you as on 30th April 2022. That is a cutoff date. Any amendment that takes place after the 30th April 2022 will not be applicable for your November 22 exam. Done. So therefore, I will be covering all the amendments of November 22 without excluding one point also. So that rest assured. Second, for May 23, as our batch is going, in May, June, July, even August little bit, okay, 10 days. So due to that reason, definitely I will be covering up some more changes that may be applicable for May 23 also, because this batch is primarily for November 22 and May 23 students, okay. But for May 23, the cutoff date is, 31st of October. Until that point of time, I am not taking the batch. And I also don't know what amendments that is going to come in future, because right now we are in the month of June. How will I know? I am not son-in-law of Nirmala Chechi, okay. So if it is the case, then I will know what is there in her mind. No way. So therefore, what is there in the box in future, I really don't know. So but as and when we go through the portion, so any good changes etc. that are made applicable, I will definitely touch upon those. That is for your subject knowledge purpose, not for the purpose of your exam. And I am not discussing that with the intention that you will fail in November 22 so that it will be useful for in May 23. No, not with that intention. Just to learn the subject, I am just going to discuss that also, okay. Then you are being provided with two books already. So one is resource book, volume 1, and another book is That's It book. So this is the That's It book. The entire indirect tax, this much only, okay. And by preparing this, if you feel like you can complete CA, you are making a mistake. Definitely no. Then sir, what is this for? This is for revision. This is for revision, okay. So all important points which you need to write. Basically, I am making you lazy, okay. That is the bottom line. You should have created some, summary notes, etc. But I did that job also. Okay, so coming back, so this That's It book contains the summary of each segment. After completion of every chapter or every segment, I call chapter as segment. After completion of each segment, if you want to know the summary of that, crisp summary of that, you can refer this, okay. And so you already been provided with resource book volume 1. You will be receiving volume 2. This volume 1 contains GST 50% portion. Volume 2 will contain remaining portion of GST plus customs and FTP. That is for volume 2. And 3 books in total. Now fourth book, that is solved workbook, that contains problems and solutions. Around some 800 problems and solutions I have incorporated. So that will also be provided for you to practice. And some questions from that solved workbook I will be discussing the class that contains all past exam questions, RTP questions, MTP questions, everything will be there. Beyond that you don't have to refer. By the time you complete this 4 books itself, exam will come. So you don't have to refer anything else beyond this for your exam, including any ICI study material or RTPs, etc. because I will be giving you everything whatever you need, okay, full meals. Now it is you to eat it and digest it, okay. So therefore you don't have to worry about, sir, what is that we need to do? Don't worry. So as you have paid fees and trusted me, it is my turn to serve you better till your exam, and I will ensure that you get everything for appearing for the exam, and you will be having one smile after seeing the question paper. This is my responsibility, pa. Done? Okay, fine. So now let's start with the subject. This GST, definitely some of you might have learned this at intermediate level. So if you have no idea about GST at your inter level, can you please raise your hand that you don't have any idea about GST at all? Wow, super. Okay. So because now if we are in November 22, so in intermediate it was applicable from May 2018. So therefore I was under the impression that you all know the basics of GST at least, but don't worry, I'll be taking class from scratch only. But if you already know, it will be like a repetition for you. And as we progress to the advanced concepts, at that time you will be trying to understand, okay, for this is why we have been discussing all these things. So it will be like a revision also, okay. Now you can see your resource book volume 1, whatever is provided. You don't worry, you don't need any prior knowledge of GST. I'll take from scratch only. And if I am little bit fast anywhere, don't worry about that, because I cannot spend too much time on the basics. Reason, if I spend too much time on the basics, then as we go towards the advanced topics like offences, penalties, refunds, appeals, adjudication, advanced ruling, there you will find difficult, because there I have to rush. You understood? So therefore basics, if you are not able to understand, please feel free to ask the queries after the class. During the class, you don't have to ask any query, because everything I will definitely explain. If anywhere I feel like you have not understood, so there definitely I will give a break. I will ask you, if you have any queries you can ask, because not every concept is that easy to understand. So there could be some difficult concepts, so there you can, because I don't want the flow to be affected, for that reason only, okay. And after end of each class, so I will be available for you for doubt clarification. So even online students, you can also ask your doubts through Zoom. I will share the link with you. And Sundays anyhow you are free, because basically you are free only on Sundays, okay. So Sundays also I will be sparing time with you for clarifying your doubts. Don't worry about that. And next thing, when it is like this introduction to GST is a basic concept only. So this we will be learning through, already you have some idea, I feel like so. So can you tell me how GST has formed? So we will have an interactive session, pa. Now too much one-sided will not be good for you also. I doubt that you will sleep, if I am only talking. I want you also to talk little bit, please. So tell me, is GST a new tax, or is it merging various old tax we have got GST? What is your answer? Merging various old taxes we have got GST. So GST is not the creation of this government. You understood? Clear? This is not something new. Previously we had lots of indirect taxes here, like excise duty we had. So when excise duty was levied on manufacture, excise duty was levied. And then on import and export, customs duty was levied. On providing services, service tax was levied. On sales, central sales tax and value added tax was levied. These were the various indirect taxes which we used to have in the past. And these are the indirect taxes which are majorly levied by central government. Even state government levies were also there. Indirect taxes. Can you name few state government levies that you know? State government indirect taxes that was levied in the past. Any idea? Value added tax. Good. Next. Entertainment tax. Octroi, that is purchase tax. Luxury tax. Have you heard this word? Then advertisement tax. Entertainment tax already you said, sir. Advertisement tax also on what? On these hoardings. So various hoardings that they keep, so they need to pay this advertisement tax. On the hotels, so luxurious hotels, 3-star, 4-star and 5-star hotels, we need to pay luxury tax for staying in that hotels. So these were the various indirect taxes that were levied by the state government. First, what is the difference between direct tax and indirect tax? Which you know. You can just definitely share, because at final level I should not ask this question. So what you know, you tell me. What is the basic simple difference between direct and indirect taxes? Okay, shifting of burden, that is in case of indirect tax, if I pay, I can in turn recover it from the next person. That's what you mean to say. Whereas in case of income tax, I have to pay out of my pocket, I cannot recover it from the next person. Superb. So which is like, if I bear the pain, that is direct tax, correct? If I can transfer the pain to next person, that is known as indirect tax. But in indirect tax, who will have the ultimate pain? Consumers. Okay. So consumers will have the ultimate burden of indirect taxes. This is one difference which we all know. But there is another difference that we need to know, that is, usually indirect tax is on revenue, whereas income tax is on income. What is the difference between revenue versus income? The gross is known as revenue and the net is known as income. Which means, sir, in every transaction there is both indirect tax as well as income tax. Will you agree with my statement? There is indirect tax as well as income tax on every transaction. Yes or no? No, I'll prove you wrong. You take a chartered accountant who gets fee from the client, he need to pay GST. And after reducing the expenses, he get a profit, PGBP, on that he need to pay income tax. You take a trader, on sales he need to pay GST, that is indirect taxes he need to pay, and minus expenses, on profit he need to pay income tax. You understood what I am telling? Which means on every person, both gross, that is on gross there will be indirect taxes, on net amount there will be income tax, but of course exceptions also will be there sometimes. Example, so income from house property, when residential property is given on rent, on rental we need to pay income tax, but we don't have to pay indirect tax, because rental income from residential property is exempted usually under indirect taxes, but under income tax we need to pay PGBP and IFOS, then IFHP is there, na? Income from house property. In income from house property, whether the let out property, commercial property only we pay income tax, or even residential also we pay income tax. Let out, correct? So whether it be residential property or commercial property, we need to pay income tax. This is what I mean to say as exception. Sometimes both will not be there, but majority of the cases, both GST also will be there as well as income tax burden also will be there. So this is what simply I just wanted to convey to you, that, you know, when you take a transaction on the gross amount, usually we pay GST, that is indirect taxes, whereas on the net amount we pay the income tax. This is the basic difference when it comes to computation. Okay. Then that is in the past. What is the past I am talking about? Before 1/7/2017. Before 1/7/2017, we had lots of indirect taxes which were levied by the central government as well as state government, that got subsumed into one single tax called as goods and services tax. So GST is not a new tax, it is combination of various old tax, they call it as GST. Done pa? Understood or not? So what were the indirect taxes which were levied by the central government in the past? Excise duty, you can see that in page number 4. Excise duty, then customs duty, service tax and sales tax. These were the 4 pillars of indirect taxes in the past. Excise duty upon what? Usually indirect tax is the event based taxation. Event based taxation means one event will happen, then only the tax will come into the picture. Okay. So excise duty was levied on what? Manufacture. When you manufacture, you need to pay excise duty. And when customs duty was required to be paid on import of goods and export of goods. Then when service tax was required to be paid whenever services were rented. And when central sales tax was required to be paid on interstate sale. What is an interstate sale? One state to another state. When there is movement of goods from one state to another state, that is interstate sale. Now what they did? Customs duty is kept outside the ambit of GST and they merged excise duty, service tax, sales tax into GST. Got it? Understood? So customs duty is outside the ambit of GST, excise duty, service tax and sales tax got subsumed into GST. So that is what I have given in page number 7. You can see that page number 7. That is, central excise duty, service tax and central sales tax got subsumed into GST. So how we can remember how GST formed? First point, all indirect taxes levied by central government except customs duty got subsumed into GST. Clear? Got the clarity? Then in customs duties, there were additional customs duties called as countervailing duty and special additional duty. This countervailing duty was to counterbalance excise duty and special additional duty was to counterbalance sales tax. Why this counterbalancing is required? For example, you imported a product. I purchase a product which is manufactured in the domestic market, same product. For example, one car you take, you imported one car, but I purchased the same model of car which is manufactured in India. Now, who will have more burden of taxes? So first I need to pay customs duty on import of raw material used in that car. Correct? Manufacturer who imports the raw material to manufacture the car, will he pay customs duty out of his pocket? No, he will be in turn recovering it from me. Means I have the first burden, customs duty paid on raw material. Then he manufactures it. When he manufactures it, he will be collecting excise duty also from me, because he need to pay excise duty to government. Number 3, whenever he makes a sale, he need to pay sales tax to government. So he will be collecting the sales tax also from me, which means what are the tax burdens that I have when I purchase a car which is manufactured in India? I need to pay customs duty on raw material, excise duty on finished product, that is car, and sales tax on the car. That burden will be on me because he will pay to government and in turn he will recover it from me. Will you agree with me? Yes or no? Whereas when you import, so you have only one burden. What is that? Customs duty on the car. You got it? So which means where there is more burden, assuming the price being same, where there is more burden on the one who is purchasing domestically. So is this what our country need to achieve? That is encouraging imports and discouraging local purchases? Never. Then what they should have done? They should have eliminated the excise duty and sales tax on local manufacture. But if they do that, that is loss of revenue to the government. Correct or not? So then what will you suggest? On import also let there be excise duty and sales tax. Got it? You got it? Understood or not? If at all I purchase it locally, I have to pay what? Customs duty on raw material, excise duty on finished product, sales tax on finished product. Correct? But when you are importing, you are paying what? Only customs duty on finished product. So who should have more burden? Importer or local purchaser? Who should have more burden generally? Importer. Who should have more burden of taxes? Importer. Then only we can discourage import. Will you agree with me? Whereas the local purchaser should not have more burden, because we should not encourage imports, we should discourage the imports. Why we should not encourage imports? Because imports leads to foreign exchange outflow. When there is foreign exchange outflow, the rupee depreciates so drastically, because we don't have that much of forex reserves. We need to buy the forex. When we are buying the forex, then the rupee will not have a demand in the global market. So due to that reason, we should always discourage imports and encourage exports. Okay. So what is the motive of the government in order to protect the foreign exchange reserves? Come on. Encourage, discourage. Till the time we complete indirect taxes, this should be there in your mind. So because every decision, policy that is taken will be surrounding this only. So for example, foreign trade policy, like that one concept is there. In that foreign trade policy, we will be learning lot of export incentives. Why first of all export incentives are required? Because what is the motive of the government? Encourage exports, discourage imports, and there will be something called as anti-dumping duty, then anti-subsidy duty, safeguard duty, like that some additional customs duties are there in customs. So why they have levied that? What is the reason behind it? Because what is the motive of the government? Encourage exports, and when additional duties are levied, what will happen to the import price of that product? When import price of the product increases, will a person try to import or purchase it locally? Okay, what has happened? Example, I am just giving you, you take this toy sector, toys. You know, when you were kids, you would have seen lot of toys, different varieties of toys. But now, just going to the market, you will not be seeing any kind of Indian made toys. You will be seeing only made in China toys. Why? The excessive dependence was there on China, because the price was very less. Now recently what government did is that they levied anti-dumping duty on toys. The price of the toys have increased. So they are discouraging the import of toys and they are encouraging people to buy the locally made. You got it or not? So every decision, every provision will have a reason here. So that reason we will be definitely learning in this regular batch, because first we will see the bare acts. Section we will read. From that section, we will analyze as to why it is given, and thereafter we will solve the illustrations. That's how the approach will be. Okay. So each and every point, first we will see the section. Thereafter its analysis. Thereafter application. Okay. So that way we will cover each and every section and we will proceed. Okay. So now coming back to our discussion, I was talking about CVD and SAD. So why this CVD and SAD was levied? Because a local person, that is a person who is purchasing locally, a local manufacturer will be selling the product to a person, so he will have more burden of indirect taxes, whereas an importer will have a less burden of indirect taxes. We need to load the importer more tax burden. So for that, let him also pay excise duty. If you buy locally, you are paying excise duty, yes or no? Yes. So then importer also, let him pay excise duty. You are locally purchasing, you are paying sales tax or not? Yes. So then importer also, let him pay sales tax. But Excise Act and Sales Tax Act cannot allow levy of excise duty and sales tax on import, because on import we have only customs duty. How excise duty and sales tax can be levied on import? The law cannot permit, and we cannot modify the law also. For that they created a duplicate excise duty called as countervailing duty, and they created a duplicate sales tax called as special additional duty. Understood or not? So countervailing duty is what? Duplicate of excise duty. To counterbalance excise duty, they created countervailing duty, in short CVD. Okay, countervailing duty, in short CVD, to counterbalance excise duty. Then special additional duty is to counterbalance what? Sales tax. So SAD, okay, to counterbalance sales tax, because the importer will feel sad after paying that. And countervailing duty and special additional duty will be payable in addition to customs duty on import. Is it clear? Understood? Now, CVD is duplicate of whether excise duty got merged into GST? Yes or no? Then countervailing duty, its duplicate also got merged into GST. Is it clear? Again I am repeating. When we import any product, we need to pay basic customs duty, that is customs duty, plus we need to pay additional customs duty called as CVD SAD. Now CVD SAD is a counterbalance of excise duty and sales tax. As excise duty got subsumed into GST, correct or not? See there, excise duty got subsumed into GST. As excise duty got subsumed into GST, its counterbalance is what? CVD, that also got subsumed into GST. And sales tax got subsumed into GST. Yes, sales tax got subsumed into GST. So its counterbalance is what? SAD, that also got subsumed into GST. Now, what is the first point that you need to remember? All indirect taxes levied by central government except customs duty, but including CVD and SAD under customs got subsumed into GST. Clear here? Are you understanding this? So this is the first point, that you need to remember in this. Then next, second, state government levies. Not all state government levies, not all. Selected indirect taxes levied by the state government also got subsumed into GST. What are they? Value added tax. You said octrina, purchase tax. Okay. So value added tax, purchase tax. Tax on lottery, betting and gambling. That was also levied. I am not talking about your income tax winning from horse races, betting, etc. Not income tax, indirect taxes. State government used to levy something called as tax on lotteries and bettings. So that tax also got subsumed into GST. Then entertainment tax, luxury tax and advertisement tax. So these indirect taxes levied by also got subsumed into GST. What about the other state government indirect taxes? Subsumed or not subsumed? Not subsumed. Example, have you come across something called as professional tax, which we need to pay to the state government? Every organization which is having some specified number of employees, more than that specified number of employees, is required to pay professional tax to the state government with respect to each employee. You know that? Is that professional tax subsumed into GST? No. Is it still there? Yes, it is still there. Then in Maharashtra there is something called as LBT, local body tax. Whether that got subsumed into GST? No. Why? Because these indirect taxes levied by state government, what are they? First, value added tax, purchase tax, tax on lottery betting, entertainment tax, luxury tax, advertisement tax. Just these 6 indirect taxes levied by state government got subsumed into GST, and other indirect taxes levied by state government not got subsumed into GST. So these are all important points for MCQ. Okay, you have multiple choice questions for 30 marks, you know that, and remaining 70 marks is descriptive. And that MCQ, I have made one video also on the recent exam suggested answer in my YouTube channel. So somewhere I got the MCQs, maybe one student would have taken one scanner or what, I don't know. Literally with options I got, okay, so question and answer. And I have posted that in YouTube also. Of course, I gave the credit from where I have taken. Lot of students also confirmed that these are all the correct questions only. But from the last 3 attempts, if you see, the MCQ part is very, very difficult. 30 marks, getting 10 to 15 is becoming difficult, because they are identifying. Maybe they, one full day they are sitting on creating MCQs or what, I don't know. So somewhere remote corner they are going and they are creating some questions. Okay. For example, suppose if you know the subject, you will be able to find the difference. Sale of security. Sale of security is actually not covered under the goods definition. It is also not covered under the services definition, because GST is payable on goods and services. GST full form is what? then goods and services are the subject matter for levy under GST. So in the meaning of goods as well as in the meaning of services, securities are not treated as goods, not treated as service, which means are we required to pay GST on securities? No, no need to pay GST on securities. Now, in the four options, one option is not a supply, another option is neither supply of goods nor supply of services. Both are same only, no? Will you agree with me? Not a supply, one option. Neither supply of goods nor supply of service is another option. Now, the student is, spending 10 minutes in that MCQ itself, which is correct. Both are same only. Actually, in the law, neither supply of goods nor supply of service is a word that is used for exclusion from the supply. Whereas when an activity is not at all covered under supply, it is not a supply. It is like 4 MCQs will be like 4 Chinese people sitting. And they will give one photo to you. They will ask, who find in this? 4 will look alike. You understood? So, like that the MCQs they are creating. So, we will not be able to find what is the correct answer. So, due to that reason, be careful. Listen to the class. All these points, small points which I am conveying will be useful there. Okay. So, whether other indirect taxes levied by state government got subsumed into GST? No. Entertainment tax got subsumed in GST? Yes. Have you been to any movie recently? Yes. Have you seen the ticket? In that entertainment tax is still there. I am talking about 2022. 2017 itself GST came. Then when entertainment tax is subsumed in GST, then why today entertainment tax is there? Any idea? That entertainment tax is levied by local authority. Chennai Municipal Corporation or any city, municipality or municipal corporation, the local authority levying. Sir, in constitution, local authority also have power to make tax law? Yes. Yes. We created like that. So, because local authorities also should survive, na? Should make money, na? So, they can also collect the taxes. And when they collect the taxes, whether those taxes got subsumed into GST? No. The local authority levies not got subsumed into GST. For example, entertainment tax. But there are many local authority taxes which were not subsumed into GST. And now, any state government wanting extra revenue, what they will do? They will go to the local authorities. They will empower the local authorities and they will bring new variety of taxes and they will be collecting that. You understood or not? Got the clarity? So, this is a mistake while drafting. So, they should have taken care of this. So, because if local authority is empowered to collect the taxes, then there is no point in having a GST which is called as a single tax in the entire country. First of all, GST is not one nation, one tax. Okay. So, because across the country we don't have single GST. So, we have dual GST model. What is dual GST model means? Have you been to any restaurant? Saw the bill, how it will be 2.5% CGST, 2.5% SGST, correct? What does it mean? Central government also can collect tax, state government also can collect tax. That is known as dual GST. Is income tax single tax model or dual tax model? Single tax model, but GST is dual tax model. So, can we say GST as one nation, one tax? How we can say? For namesake we can, but literally it is not one tax because central government also will levy, state government also will levy. You understood or not? So, coming back to this, so 3 points you need to remember in order to know how GST is formed. First point, come on, all indirect taxes levied by central government except got subsumed and including CVD and SAD got subsumed into GST. Second point, indirect taxes levied by state government. Which indirect taxes? 6. Value added tax, purchase tax, betting tax, luxury tax, advertisement tax, entertainment tax got subsumed into GST. Then indirect taxes levied by local authority not subsumed into GST. That's what I have given in the footnote in that page. You can see customs duty is not part of GST, but additional customs duties like countervailing duty to counterbalance excise duty and special additional duty to counterbalance sales tax are forming part of GST. Also, entertainment taxes levied by the local authorities are outside the purview of GST. Not only just entertainment tax, because in study material it is given as entertainment tax, but literally all indirect taxes levied by local authority not got subsumed into GST. If you want, you can just make note over there that all indirect taxes levied by local authority not got subsumed into GST. Okay. Now, we completed one concept. What is that? How GST is formed. Then now second, already we discussed this, whether GST is a single GST model or a dual GST model. Dual GST model. What does dual GST model means? Both central government as well as state government levy tax on the common tax base. What is the common tax base? Value. Some value on that both central government as well as state government will levy. Okay, and usually their partnership is what ratio? 50-50, partners in crime. You understood or not? Exactly equal. Okay, so 50% central government and 50% state government. Is there any way to change this ratio? No, never. If any rate increases, in that increase also 50% will go to CG, 50% will go to SG. This is the bloody reason why petrol and diesel did not come into the ambit of GST. Okay. And see, I'll never talk about politics and all in class, but I talk about the policies. There is big difference between politics and policies. Okay. So politics, I'm least interested, but policies, we all should be concerned of. Okay. Here, petroleum products is not coming into the ambit of GST, and central government wanted it to bring it into the ambit of GST, but the state government don't want this to come under GST. What is the big reason here? Today, central government is levying some tax on petroleum products called as central excise duty. State government is levying something called as CST and VAT, local taxes. So now, central government whatever they are levying and state government what they are levying is independent. So which means it's not 50-50. If state government alone wanted to increase its share, can it increase? Yes. So it can increase the VAT rate or it can increase the tax rates on that fuel so that the price will vary. That's where today Tamil Nadu one rate, Karnataka one rate, Andhra Pradesh one rate, Maharashtra one rate. Why such a disparity? So because of the different tax rates being followed by the state government. If it comes into GST, let it be Delhi or let it be Kerala, the rate is going to be the same, because 50% will go to, 50% will go to, and petroleum products are basically administered price. Administered price means you cannot fix the price based on demand and supply. Yes. So definitely it is a regulated price. So this is the price of the petrol per liter. Now in that 50% of the taxes collected by CG, 50% by the SG, then the rate is going to be the common and the price is going to be the common. That's where boss today you take any product, MRP based goods, so the price will not differ. But in the past there used to be different MRPs. If you are in Tamil Nadu, one MRP, if you are in Karnataka, another MRP. So like that MRPs itself used to change. The price of the product used to change because of the VAT law. Because value added tax will be levied by the state government. Same product, different rates will be there. I clearly remember this basmati rice is there, na? Basmati rice. In Tamil Nadu, it was 1%. And in Karnataka, it was 5%. In Andhra Pradesh, on the same basmati rice, it was 14.5%. Okay. So why same product will have different rates of VAT? So because states were empowered to make the law, but now nothing like that. So in dual GST model, even though central government and state government levy the tax, but this should be a common decision taken by GST Council. Got it? Understood or not? Even though they are empowered to levy separately, but the decision has to be taken common. So that decision will be taken by GST Council. GST Council is a constitutional body. And who will be inside the GST Council? Prime Minister. Will Prime Minister be there in GST Council? No. And then who will be there in GST Council? Union Finance Minister and State Finance Ministers will be the members of the GST Council. Okay. So now, first concept we completed, how GST formed. Any doubt in that? No. Second, dual GST. Any doubt in that? You can see here what is the meaning of dual GST, which is in page number 7. Dual GST model refers to levy of GST simultaneously by center and state on common tax base. Dual GST is required in India. Why? Because India is a federal country. What does federal means? There is a fiscal federalism. So states also can take the decision. There is an autonomy. So there is clear-cut division between the center and states as to what a center should do and what a state should do. The autonomy was given, and so the correction of revenues also. So therefore, in order to protect that fiscal federalism, so for that reason only, so we have this dual GST model. Think of GST being a single tax in India. What would have happened? Simple, like how today states are all requesting for their income tax share in the budget allocation. For GST also they need to stand, and those states which are ruled by central government, so central government related party, for those states only they will get funded. And needless to say, South India gone. Okay, so because here never the central government will come. Tamil Nadu, no way. So no national party, okay, only regional party. Kerala, needless to say, definitely no. And BJP and all impossible. And then Karnataka, okay, to some extent. Andhra Pradesh, again regional party. Then where from they will get the money towards the budget allocation? They will not get, correct or not? So that's the reason why states don't want this problem to happen. They put the pressure on the central government. Initially, when Kelkar task force recommended GST, it was actually single GST model. Even P. Chidambaram, the then finance minister, when he initiated the discussion of GST, it was single GST only. But later on, state said, no, single GST means forget about that idea. If it is dual GST, then only we will agree. Okay, that's why to protect that fiscal federalism only they created this. A dual GST is designed keeping in mind the constitutional requirement of fiscal federalism. Okay, now, the third concept which I was about to discuss with you was GST Council. I started the discussion. It is in a different place. You can see page number 16. I will make you to jump between the pages. It is because step by step we need to learn the concept. Everything will be interconnected for that reason only. But when you prepare, you don't have to prepare this way. You can prepare in a normal flow. What work you are going to do? Turning pages, at least that you do know. Okay. So I am not making you write anything. Everything I have given, at least turning the pages, you will be active. Something we are doing. Okay. So say this, GST Council. GST Council is not a government body. It is a constitutional authority. What is the difference between a government body and a constitutional authority? Government body will be under. So then whatever government says, they need to listen. But GST Council is not a government body. So it is a constitutional authority. Means the powers are derived from where? Constitution. Article 279A of the Constitution gives the powers, roles, responsibilities to the GST Council. And as the constitution is brought into picture, who will form the GST Council? President of India. Okay. Prime Minister will not form the GST Council. Who will form the GST Council? Who will constitute the GST Council? President of India. But President of India is not the head of GST Council. President of India will form the GST Council. Then who will be the members in the GST Council? We need to understand. Total 33 members here. How 33 members? Union Finance Minister, one person, okay. Then State Finance Minister. How many states we have? 38, 28, okay. Thank God. 28, correct. Because Jammu and Kashmir is now not a state, union territory. So which means exclude Jammu and Kashmir. States wise, if you see, there are only 28 states, including separation of Andhra Pradesh into AP and Telangana. So 28 states only, 28 states, which means 28 finance ministers. Each and every state will have one finance minister. So 28 finance ministers. There are 3 union territories in India which were given partial statehood to form an assembly and function. So what are the 3 union territories with state legislature? Pondicherry, super, Delhi, Jammu and Kashmir. Because the state Jammu and Kashmir is divided into 2 union territories, Jammu and Kashmir and Ladakh. So Ladakh is a union territory without state legislature, whereas Jammu and Kashmir is a union territory with state legislature. So state legislature means they will have an assembly, cabinet of ministers, chief minister, everything will be there. It functions like a state only, but it is not called as a state, it is called as a union territory, okay, but it functions like a state. So which means even these 3 union territories will have state finance ministers, yes. So what are the 3 union territories, can you tell me once again? Pondicherry, Delhi, Jammu and Kashmir. So already 28 you said up. For the 28 you add these 3. So total how many finance ministers, state finance ministers? 31. Can you tell me the remaining union territories without state legislature? Think. Goa? Is Goa union territory? When it became union territory? I don't know. It is not a union territory. So we have Ladakh, already I said. Then Andaman and Nicobar, Lakshadweep, Chandigarh, Daman, Diu, Dadra, Nagar Haveli. Now it got merged into 1 union territory. Previously it was 2 union territories. Dadra and Nagar Haveli was 1 union territory. Daman and Diu was another union territory. They have now merged it into 1. So therefore we have only 5 union territories without state legislature. Number 1, Ladakh. Then Lakshadweep, Andaman and Nicobar, Chandigarh, Daman, Diu, Dadra, Nagar Haveli. Okay. So these are the 5 union territories without state legislature. For these 5 union territories, 1 union MP in charge of the finance is appointed. So therefore already 1 union finance minister, number 1, plus 31 states, 31 state finance ministers. So 1 plus 31, 32. Plus 1 union MP in charge of the revenue for these 5 union territories. So total number of members in GST Council, how many? 33. Okay. So first point, Article 279A empowers the President to constitute this council. Union Finance Minister is its chairman and finance ministers of the state shall be its members. And Union Minister of state in charge of revenue for what? For that 5 union territories. Okay. So he is also a member, that is union MP. And in total, how many members are there? 33 members in the GST Council. Now, what is this GST Council? It is a decision making body of GST. All decisions are taken by GST Council only. And recently, one Supreme Court decision was there. That is, GST Council can only give recommendations. It is left to the center and state whether to follow that recommendations or not. So, GST Council is not a supreme authority to decide everything, like that Supreme Court ruling was there recently. And that shook the entire GST Council basically because every state was forced to follow whatever GST Council says. But in writing, it will be written as recommendations. Generally, recommendation means what? I will recommend something here to you and it is up to you whether to follow that or not, correct? But that was not the case. So far, whatever GST Council says, state should listen. You got it? Because there was something in their hand called as, GST compensation. That is the next story, we will come to that. Okay. So, every state was listening to whatever GST Council says. But right from the beginning, I also have this doubt, who is GST Council to tell and why the state should listen to that? Because basically who is there in GST Council? Finance ministers. So can finance minister decide everything? Then why a state needs a chief minister? You got it? So how come GST Council will have that much of autonomy? So rightly the Supreme Court has pointed out, so now they will make a constitutional amendment empowering GST Council, so not recommendation, whatever GST Council says that every state has to listen like that, because every Supreme Court decision we will unturn this way only. First dispute, we will file a case. After filing case, we will get the judgment in our favor. We will celebrate. Next day, law itself gets amended and the ruling will be unturned. Okay. So then, why the judiciary is there in India, sometimes we get a doubt. Any decision that is in favor of the people, they will make the amendment. That to what amendment? Retrospective amendment. So prospective also okay. Retrospective amendment. So they will nullify the ruling itself. Okay. So this is something really dangerous in a democratic country, but that is only happening here. Coming back, so how many members will be there? 33 members. What work they will do? They will give recommendation to the states on important areas related to GST, like rates. Which product, what rate to be applicable? Exemptions. So which product should be brought into exemption, which service should be exempted, like that certain crucial decisions, including the return filing process, the procedures, everything will be decided by the GST Council. Okay, because I still remember from 2017 till today, this ITC related problem is haunting like anything. First they said you can take the credit. Next they said only when the supplier files GSTR1, that will come in 2A and plus 20% you can take. Then they said 2B plus 10%, then plus 5%. Now nothing, only match credit you take. Okay, sir, if my supplier has not paid the tax, is it my problem, sir? But how can you say that if your supplier has not paid the tax, you cannot take the credit? That's how the law is. For your November 22, that is only applicable. Only matched credit can be taken. Extra 1 rupee also you cannot take the credit. In that, they created 2B. And surprisingly, 2B reference is not at all there in entire GST law. In GST Act, Control F2B, it will spit on your face. No result. You understood or not? Where from you are searching? It is not there in the law. Why are you searching for GSTR 2B? But GSTR 2B is only the document. On that only we should take the credit. Okay. And if I speak anything else, then anti-Indian I will become. You understood or not? So, therefore, this matching of credit, about that multiple GST Council meeting, this written mechanism, they have messed like anything. One more major disaster of Nirmala Chechi in the GST Council was related to returns QRMP scheme. Quarterly return, monthly payment. Torturous it was. It was like strawberry sauce based Maggie. No? How it Maggie with strawberry sauce, how it will be, no? Like that. Like that she created something. QRMP and quarterly return, monthly payment. I have to pay tax monthly, but return I will file quarterly. If I file return quarterly, my recipient will be able to take the ITC quarterly. He will hit on me stating that why I should wait for 3 months to take the credit. Now again they are telling there is an option called as IFF. Monthly filing you can do. Invoice furnishing facility. You furnish all the invoices monthly so that recipient will take the credit. Then it is same monthly only, na? It is the same monthly only. So then why it is called as QRMP? We don't know. Then another big disaster. Example, pay 1% of your gross liability through cash ledger. Rule 86B. Even though you have credit balance to pay your liability, whatever is your liability, 1% you have to pay through the cash ledger by cash. Why? There was no funds, no cash flow. So to create the cash flow, they are bringing that. Why I should do that here? Isn't it begging here? Correct or not? So literally government is begging here 1%, ayya 1%, ayya 1% like that. Might have credit. First of all, for that credit, 1000 restrictions. Still I have the balance of credit. That also I cannot happily use. Why I cannot use? I have to pay 1% of the liability through cash. Okay. So these kind of amazing decisions will be taken in GST Council. Examples only I give. come, it will come. Lot of examples like that it will come. Okay, amazing think tank we have. Okay, GST Council mind and all, if we can keep somewhere in museum, so it will be like amazing. No, priceless it is. Such a kind of great things they have created for the last 4 years. So this GST Council will make recommendations to the center and state on important issues like tax rates, exemption, dispute resolution, etc. Now let's see how the voting mechanism will be there. So we have 33 members now. In every GST Council meeting, the quorum, what is quorum means? Minimum number present to be called as a valid meeting. The quorum is 50%. So what is 50% of 33? So 17. Okay, we cannot have the rough number, no odd numbers and all, like 16.75, 16.25, 16.5, from where we can bring those people and all. Okay, so it should be round 17 members should be present in the meeting to be called as a valid meeting. So it is a quorum, come on, 50% of the total members. Okay, so quorum is 50%, and voting will be on a weighted basis. And to have any decision to be taken in the GST Council, so they require a 3/4 of majority, not a simple majority like special resolution majority. In Companies Act we have special resolution majority. Now what is that special resolution majority? 75%, like that here 3/4. So in order to call a decision to be taken, 3/4 is the majority that is required. That too not 3/4 normal majority, 3/4 of weighted majority. What is this weighted majority? Central government vote will have 1/3 weight, whereas state government vote will have 2/3 weight. Okay, so just read that point. The weighted votes are 1/3 for CG and 2/3 for SG. Decision considered to be passed if 3/4 weighted majority is obtained. Let's try to understand this with a simple example. You can see one illustration below. There is one proposal. The proposal is to increase the GST rate on smartphone from 18% to 28%. Right now the GST rate on smartphone is 18%. So to increase the GST rate from 18 to 28. And this is a decision to be taken in the GST Council meeting. And how many voted in favor? Definitely Union Finance Minister will vote in favor only. Increase in revenue na yaar. So voted in favor one Union Finance Minister, and definitely Union MP has to listen to what Union Finance Minister says, because they both belong to the ultimately same party, correct? So therefore one Union MP and 4 state finance minister, maybe like Uttar Pradesh, Karnataka, Gujarat, like that, some states which are under their control will also definitely accept. Okay, 4 state finance ministers. And for your information, I am not against BJP. Okay, I am against the policy of the BJP. There is a difference again. I am a member of BJP. If you want, I will share the membership details also. I have taken the membership of the party also. Okay, so but it is because if I have not taken the membership, then my entire religion itself will change. I don't want that to happen. Okay, so because if I need to criticize, definitely I should be a member. Then only I can criticize. For that reason only I have taken membership. Okay, so therefore here I am talking on the policies what they are taking, and I feel like I have that freedom of speech, and I am not inducing you, not to vote for BJP, etc. and all. It is no way connected to the politics. I am talking about how a person should not make a law. You got the clarity? Because definitely tomorrow you are going to become partners in the nation building. So you are going to build the nation, of course. So therefore your recommendations will be given importance, and when you give the recommendations, your thought process should be proper. So that's why. Okay, fine. So here voted in favor this and voted against 13. How many members are present in the meeting? Count. 13, 14, 15 and 4, 19. Quorum achieved? Yes, quorum achieved. Now, what is the total weighted votes? What is the total weighted votes? Central government vote will be 1/3. State government vote will be 2/3. Okay, now count this. 1 into 1 by 3 plus 1 into 1 by 3 plus 4 into 2 by 3. Then 13 into 2 by 3. 26 divided by 3. So total is what? 26 plus 8 plus 1 plus 1. 36 ah? 36 only, no. 36 divided by 3, that is 12. So what is the total weighted votes? 12. You understood how we got the 12? Please respond here. It is basic mathematics only here. I did not take anything else. So state government vote will have 2/3 weight. Central government vote will have 1/3 weight. So the total weighted votes will be 12. Now, how many voted in favor? How many weighted votes in favor? That I need. So 1 into 1 by 3 plus 1 into 1 by 3 plus 4 into 2 by 3. So total how much? 10 by 3. 10 by 3 means 3.33. So voted votes, weighted votes in favor is 3.33, whereas 12 is the total weighted votes. So see the majority. What is the percentage in favor? 3.33. Percentage means one number divided by another number. So 3.33 divided by 12. How much? You don't have calculator or what? Indirect tax is a practical subject. Indirect tax is a practical subject and you should have calculator. Okay. You think that indirect tax is theory subject? No, definitely no. So you should have the knowledge of practical also. And 3.33 divided by 12, how much? 20? 27.5. Whether achieved majority? No. So therefore the proposal should be dropped. Understood? This is how the voting will happen inside Gst Council. Now, this can be tested in MCQ. Okay, not yet. So far they have not tested, but definitely there is a possibility of testing these type of questions in MCQ. So what you need to remember first, in Gst Council how many members will be there? 33 members. And what will be considered as majority? 3/4 weighted votes. And what is weighted vote? For central government vote? 1/3. For state government vote? 2/3. And what is the quorum that is required to be called as a valid meeting? 50%. Okay. But actually there is a small twist in that. Even if 17 state finance ministers convene a meeting, that will not be called as a valid meeting, because the chairman of the meeting will be union finance minister or union MP in charge of the union territories. So only union minister can become the chairman. The state finance ministers cannot become the chairman, which means even if 17 states decide, they can't do anything. You understood? So this is for your information. Now, areas of recommendations by Gst Council, already I told you different areas. All these are our chapter headings. Okay. So taxes, exemptions, then special provisions for Jammu and Kashmir, any other issues related to GST. This is for your information. You don't have to remember this for exams and all. You can write whatever you like. Areas of recommendations by Gst Council, whatever you remember, you can write. That's why in CA exam they will not ask this question and all. Okay. Then, so now we covered so far three things. Number one, how GST formed. Number two, dual Gst model. Number three, Gst Council. Now, so coming back to this types of GSTs in the dual Gst model and extension to the types of GSTs. How many GSTs do we have? Is it one or two or more than two? How many GSTs do we have? Can you tell me what GSTs you have come across? CGST, SGST, IGST, UTGST. IGST is Integrated Goods and Services Tax, UTGST Union Territory Goods and Services Tax, then GST compensation cess. So we have total 5. So now we are trying to understand as to which GST will be applicable first. Yes, of course, that is also one of the type of GST. Yes, but that is also part and parcel of the computation. For example, like you take automobile sector, Now today we have 28% as the GST rate, and we have 12% as the GST compensation cess, which means when I buy a car, so I have to pay 40%. In that 40%, 28% is GST and 12% is GST compensation cess, means that is also a burden on me. So like that, if we see, of course, purpose is different. When I collect GST, that can be used for any purpose. But when it is cess, that should be used only for a particular purpose. Okay, what I am trying to convey is, from a consumer perspective, what are all the various types that we have. Okay, first, CGST is Central Goods and Services Tax, SGST State Goods and Services Tax, Union Territory GST, UT GST. These three things will be applicable on intra-state supply. What is an intra-state supply? First, what is a supply? GST, the taxable event is supply. Like how customs taxable event is import or export, and excise duty taxable event is manufacture, and service tax taxable event is service, and sales tax value added tax taxable event is intrastate sale, central sales tax taxable event is interstate sale. Like that, one event, when the event happens, the levy gets attracted. Like that, what is the taxable event under GST? The taxable event under GST is supply of goods or services or both. The meaning of supply is given in section 7 of CGST Act, which we will be learning in future. But right now, try to understand, supply of goods or services is the taxable event. What is the meaning of taxable event? One event on happening of which we need to pay tax is known as taxable event. So what is that taxable event in GST? Supply of goods or services. We are not discussing right now what is the meaning of supply. I am just reserving that for a later point of time. Now we are going to discuss the types of supply. Two supplies, intrastate supply and interstate supply. Okay, there are two types of supplies, intrastate and interstate. What is the meaning of intrastate, interstate? It is not within the state or one state to another state. It is not that. It is the location of supplier and the place of supply that determines whether a transaction is intrastate supply or interstate supply. It is not the location of supplier and the location of recipient. Again, I am repeating, listen. It is not the location of supplier and the location of recipient. It is the location of supplier and the place of supply. If location of supplier and place of supply is in the same state or same union territory, it is known as intrastate supply. If the location of supplier and place of supply is in two different states or two different union territories or a state and a union territory, then it is interstate supply. Simply, our opposite of intrastate is interstate. What is intrastate? Location of supplier and place of supply. These are the two factors. So if these two are in the same state or same union territory, it is known as intrastate. If these two are in two different states or two different union territories, a state and a union territory, then it is known as interstate. Sir, what is the location of supplier generally? If I have registered, my registered place is the location of supplier. Got it? For example, I am taking classes from here. If this is my registered place, then this place will be the location of supplier. I am supplier only, no? So this place will be the location of supplier if I have registered this place. Suppose this place is not registered. I am a registered person, but this place is not a GST registered place. Means I have registration at my home. I gave my home as my GST registration. You understood or not? We need to give the place of business. The place of business is given as my home. And I am a GST registered person, but I am coming to one fixed establishment and I am taking the classes. So this is also the location of supplier. Is it clear or not? The place from where the services are rendered. Okay. Then suppose if I take online class, my usual place of residence will be the location of supplier. Is it clear or not? I am taking online class at my home. So therefore that will become my location of supplier. So therefore, location of supplier, if registered, that registered place. If not registered, the place from where they supply goods or render services. In the absence of that place, the usual place of residence of the supplier will be taken as the location of supplier. Again, we will come across this in the chapter called as place of supply. Right now, in little bit, you try to understand the basic aspect of it. So, usually what will be taken as the location of supplier? If registered, registered place. If not registered, PE. Fixed establishment or business establishment. Okay. If there is no fixed establishment or business establishment also, then usual place of residence. This is the location of supplier. Got the clarity? Then place of supply. Place of supply is a highly technical factor. It depends upon the transaction. For different transactions, we have different place of supplies. In case of services in relation to immovable property, the place of supply will be location of immovable property. For example, you definitely you are doing articleship now. Yes? Over. Yes or over? Are you doing articleship or over? Over, huh? If it is over, super. Then you will definitely qualify November 22 exam. If you are still doing articleship, better take the leave, because already we have hardly how many months? 4-5 months only. So 4 months literally. So therefore, please take at least 4-5 months of study leave is required in order to write the exam. During your articleship, you would have went on an outstation audit, correct? When you go for an outstation audit, you stay in one hotel. When you stay in one hotel, that hotel person will not raise IGST invoice on your firm, but they will be raising CGST, SGST invoice in that state. For example, you went to Mumbai, you stayed in one hotel in Mumbai. Now, what is the location of supplier? Mumbai. What is the place of supply? Mumbai only, because in case of service in relation to immovable property, is it a service in relation to immovable property? Can you give me some examples of service in relation to immovable property? Already I gave one example, accommodation. Apart from that, repairs and maintenance, super sir. Then construction, service in relation to immovable property, accommodation, repair and maintenance, construction, works contract, interior decoration, real estate agent, all these are examples of services in relation to immovable property. What will be taken as the place of supply? Location of immovable property. Accommodation service, what is the location of immovable property? Mumbai. What is the location of supplier? Mumbai. So therefore, it will be intrastate supply in Mumbai, even though the recipient is from another state. Is it clear? Is the recipient from another state or not? Yes. Where the CA firm is located? Tamil Nadu. Where the CA firm is located? Say Tamil Nadu. And the article students as well as the chartered accountant is going for an outstation audit. Where? In Mumbai. So when they stay in accommodation there, even though the invoice is given to the firm, but in that invoice there will be CGST and Maharashtra SGST. Why like that? Because the place of supply is not always location of recipient. Sometimes it is location of recipient, sometimes it is yet another place. It can be location of supplier, it can be location of immovable property, it can be location where services are actually performed, it can be starting point of the passenger, it can be ending point of the passenger, it can be starting point of conveyance, it can be ending point of the conveyance, what not. We have a big list. That is one different chapter. We have multiple sections in that. Section 10, 11, 12, 13, 14 of IGST Act determines what is the place of supply. So, we will be learning there as to for which transaction, what is the place of supply. Now, we determine location of supplier and place of supply. Both are in the same state. What is the nature of supply? Intrastate supply. Two different states. Interstate supply. This is the simple meaning of intrastate and interstate. Clear here? Now, have a look into that intrastate and interstate supplies. Page number 8, you can see. Page number 8, you can see intrastate versus interstate supply. When location of supplier and place of supply of goods or service are in the same state or union territory, it is treated as intrastate supply of goods or services. So within the union territory also intra-state only. Don't write it as intra-union territory. It is intra-state only. Okay, intra-state means within the state, within the union territory. When the location of supplier and place of supply are in two different states, two different union territories, a state and a union territory, it is known as interstate supply. In case of intrastate, intrastate, within the state we have CGST plus SGST. If it is within the union territory, we have CGST plus UTGST. Understood or not? Intrastate, which combination will be there? Either CGST plus SGST or CGST plus UTGST. When it will be CGST, SGST within the state. Within the union territory, CGST plus UTGST. In case of interstate supply, it will be IGST. Okay. Now you can see GSTs broadly divided into 4. I did not give the GST compensation cess. That is another one. Okay. Broadly 4. What are they? CGST levied by central government. CGR, central government. SGST levied by state government. UTGST levied by, but where union territory will have the autonomy. So union territories are under whose control? Union territory without state legislature. Whose control? Central government. So levied by central government. Sir, UTGST is also levied by central government. CGST is also levied by central government. Then why two different names for that? Because they want to separate as to how much contribution is made by the union territory into a separate accounting head. That's why they created, UTGST. Is it clear? Both are levied by central government only, but how much union territory has contributed towards the GST revenue, they need to account it. For that reason only, we have a separate head called as UTGST, but levied by the central government. Then IGST is applicable in which case? Interstate supply, levied by central government. But in India, do we have single GST or dual GST model? Dual GST model. When IGST is collected by central government, can they retain fully? No, they should not retain fully, because basically the type of GST that we have, or the model of GST we have, is dual, which means center and state should have revenue. When IGST is collected by the central government, can they retain it fully? No, but they need to share. How much they need to share? 50%. Because what is the ratio? CGST, SGST ratio is what? In dual GST between center and state, what is the ratio? 50%, 50%, which means that out of IGST collected, 50% should be given to the state government. Which state government? For example, location of supplier Tamil Nadu, place of supply Karnataka. It is intrastate or interstate? Interstate. Location of supplier Tamil Nadu, place of supply Karnataka. Intrastate or interstate? Interstate. Now we need to pay IGST, and that IGST, say I am the supplier and I will pay it to central government, IGST. Now what central government will do with that IGST? 50% they will retain. Remaining 50% they should share with the state government. But here two states are there. What are the two states? Tamil Nadu and Karnataka. Tell me to which state they will give 50%. Huh? Karnataka. Why? GST is not a origination based tax, it's a destination based tax. Previously central sales tax was origination based tax. Whenever the sale happens from Tamil Nadu to Karnataka, CST was collected by Tamil Nadu. But the same sale happens now, it will be collected by central government, and 50% they will keep, remaining 50% will be given to Karnataka. Then what Tamil Nadu gets? You understood what I am talking about? Clear or not? Yes. Previously, interstate sale happens here. Between whom interstate sale happens? Tamil Nadu, Karnataka. What was the tax before 1/7/2017? Central sales tax. Who used to collect that central sales tax? Tamil Nadu government. Sir, central sales tax means central government only levy, na? Levied by central government, but collected and retained by the state government. That's how the CST law is made. CST, full form is what? Levied by central government, collected and retained by state government. Which state? Originating state. Originating state. Now, the same sale happens. Now, the same sale happens here. What is the tax name? IGST. Who collects? Central government. And 50% retained by them, and remaining 50% they will be giving to consuming state. What is the consuming state or destination state? Karnataka. Then origination state will not get anything. This has created the rift in the producing states. Producing states like Tamil Nadu, Gujarat, Maharashtra, so they did not agree to this. They did not agree. And Gujarat was forced to agree, but one person stood against this. That was Tamil Nadu Chief Minister, and she is no more now. She stood against this. She said, definitely I will not agree for this. If you cannot make GST as a consumption based tax, then there will be huge loss to the producing state, that is Tamil Nadu. Because we were getting lot of revenues. How many industries we have created? This many industries are not consumed here. So are we consuming all products manufactured in Tamil Nadu? In Tamil Nadu, no. We are supplying to the neighboring states. Then how come we can lose that revenue? So who will be beneficial person here? The consuming states will be the beneficial person. So she did not agree. She ensured that, I will not, and I will ensure that all the southern states will not agree for the GST implementation. So it was not that easy to implement GST law. So lot of problems like this was happened, and finally the central government came one step down, and they said, don't worry, we will compensate you for the loss of revenue what you are going to suffer on account of implementation of GST for a period of next 5 years from the date of implementation of GST. How much is your revenue? Some past revenue. Add a growth rate. That is your expected revenue. What is your actual revenue? The difference we will compensate. Who will compensate? Central government. To whom they will compensate? To the states. Which revenue has come down because of implementation of GST. For what period? 5 years. Then many states ask, what if you are not able to, what if we are not able to increase that even after 5 years? Okay, we will extend it for next period, further period as the Gst Council decide. So 5 years you should not take it as end point, sunset clause. 5 years or further period as decided by the Gst Council, we will support you. Now states were very happy, and so the credit goes to Jayalalitha, and she was the person who fought for this, but she was not aware of what was happening behind her. She went to the deathbed, and what was happened here is that central government gave promise, everyone agreed to this. Immediately central government created a law, GST Compensation to States Act 2017, and to give the compensation, for example, I promise you something, then who should honor the promise? I. Out of what? My own pocket, correct? What central government is doing, to give the compensation to the states, they started levying some new tax called as compensation cess. You understood? Who is giving promise? Who should pay? Ultimately, who is paying? Got it? Entire country is paying towards the GST compensation, and that money collected as GST compensation is given by the central government to the states. This states never thought. States thought they will be getting the compensation out of central government pocket, but central government did not pay out of their pocket. They created a new cess called as compensation cess on some notified goods, not on all goods, on some notified goods, and that money collected was given to the states, but still lot of pending is there. So they have recently only released a lot of money to the states. Even for Tamil Nadu, around some 7,000 or 9,000 some crores were released recently. Okay, lot of money was released recently to Tamil Nadu government also. So this compensation was required to be paid by the central government, not out of their pocket, but they have created a cess. What is the difference between tax and cess? When the revenue is collected as tax, it can be used for any purpose. We can construct a statue, we can construct a building, we can do anything. But cess should be used only for the specified purpose. Okay, so for that particular purpose, what is the purpose here? To give the compensation to the states, they levied something called as compensation cess. Understood or not? So now look into this types of GSTs. This you got the clarity. First we started with how GST form, then we have seen dual GST model and then Gst Council, then we are discussing types of GSTs. These 4 GSTs clear? Now look into this. Page number 9, there is one illustration. So you tell me, for the first one, what is the nature of supply? Intrastate or interstate? Location of supplier, Union Territory of Jammu and Kashmir. Place of supply, Union Territory of Jammu and Kashmir. What is the nature of supply? Intrastate or interstate? Intrastate. Write down there, intrastate. It is intrastate. Then what is the type of GST? Plus? Plus? No, SGST. CGST plus SGST. Why sir SGST? Because Union Territory of Jammu and Kashmir is treated like a state. Treated like a state, even though it is a union territory, but it has got the state legislature, so we need to treat it like a state. So the applicable GST law is not UTGST, the applicable GST law will be SGST, that is Jammu and Kashmir SGST, that is only the applicable law. Then number 2, location of supplier, Union Territory of Ladakh. Place of supply, Union Territory of Ladakh. What is the nature of supply? Intrastate or interstate? Intrastate. What is the type of GST? CGST plus UTGST. That's correct, because Ladakh is coming under Union Territory without state legislature. So the applicable GST law will be UTGST. Then number 3, location of supplier, Union Territory of Jammu and Kashmir. Place of supply, Union Territory of Ladakh. Intra or inter? Inter. Between 2 states, 2 union territories, or a state and a union territory is interstate. And what is the type of GST? IGST. IGST. And wait. 50% shared with Union Territory of Ladakh or not? IGST correct. Now my question is, usually in IGST what will happen? 50% will be shared with the consuming destination state. Now whether 50% will be shared to Union Territory of Ladakh? First, Union Territory of Ladakh is under whose control? Then why they need to share? So therefore complete IGST collected by central government, no sharing. IGST and no sharing. Then last one, Arunachal Pradesh, location of supplier, place of supply, Union Territory of Jammu and Kashmir. Nature of supply, intra or inter? Interstate. And what is the type of GST? IGST. Whether 50% shared? Yes. And 50% shared with Union Territory of Jammu and Kashmir. Why in the previous case I said no, but here 50% shared? Both cases Union Territory only na. In the third case, the consuming state or Union Territory is a Union Territory without state legislature, which is under the control of central government. Whereas in the next case, it is a Union Territory with state legislature, it will be treated like a state, so therefore 50% will be shared with them. Clear? Then next, so you complete this also, which is in page number 10. Location of supplier, Chennai, Tamil Nadu. Place of supply, Coimbatore, Tamil Nadu. What is the nature of supply? Intrastate. And what is the type of GST here? CGST and SGST. CGST collected, levied and collected by central government. SGST levied and collected by state government of Tamil Nadu. Then second one, Chennai, Tamil Nadu and place of supply Bengaluru, Karnataka. What is the nature of supply? Interstate. And what is the type of GST? IGST. And levied and collected by central government and 50% shared with Karnataka. Shared with Karnataka, consuming state. Then number 3, Chennai, Tamil Nadu. Place of supply Pondicherry, and it is an interstate supply. What is the type of GST? IGST, levied and collected by central government. Will there be sharing or not? Yes. Why? Pondicherry is a union territory with partial statehood, that's why, and 50% shared with Pondicherry. Then next, number 4, location of supplier Delhi, place of supply also Delhi. So it is a intrastate supply. So what is the GST that will be applicable? CGST plus, not UTGST dear. It is what? Union territory with state. So statehood, which means that it will be treated like a state. So therefore it will be SGST. And CGST levied and collected by central government. This SGST is collected by Union territory of Delhi. Then location of supplier Chennai, Tamil Nadu, place of supply Chandigarh, Union territory, that is Union territory without state legislature. Nature of supply interstate. What is the type of GST? IGST, levied by, will 50% be shared? No. So 100% with central government. Why? Because the consuming state is what? Consuming place is a union territory without state legislature, which is under the control of central government. That's why. Then last, location of supplier Chandigarh Union territory, place of supply also Chandigarh Union territory. What is the nature of supply? Intrastate. So now tell me what is the GST that is applicable? CGST and UTGST. So this CGST is collected by central government. This UTGST is also collected by central government. How many CGST acts do we have? 1. Okay. How many SGST acts do we have? 31. 31. How 31? 28 plus 3. So 31 SGST acts we have. And how many UTGST acts we have? 1. For remain all 5, we have only 1 UTGST act and 1 IGST act. This is the statutory reference. Okay. Total we have 1 CGST act, 31 SGST acts, 1 UTGST act and 1 IGST act. And this 31 SGST acts is enacted by each and every state in their assembly. And will there be any difference between CGST law and SGST law? No. How SGST law created, I will tell you. We will open CGST act. Control A, select all. Control C, copy. Open a Word document. Control V, paste. Then Control F, find and replace central with state. Save as that state SGST act. Over. You understood? Which means you don't have to feel sad that I am not going to learn SGST law. You don't have to learn at all, because whatever is there in the CGST act, the complete replica of that is only SGST act, because I told you already that Gst Council, whatever recommendations is given, has to be followed by both center and state. So due to that reason, here whatever is there in section 7, the same information will be there in section 7 of SGST act. So therefore, for exam, are we going to learn CGST act or SGST act or both? Both, because once you learn CGST act, by default SGST act is covered. Okay. So therefore, any reference that we make will be CGST act. Then what about IGST act? IGST act, many provisions of CGST act is made applicable for IGST act. Apart from that, in IGST act, few sections are there. That sections we will learn for syllabus. But UTGST act, no. Because UTGST act, again, the replica of CGST act only, but that is made applicable to union territory. In the place of, intra, that is within the state, wherever state comes, that is replaced with union territory. That is what UTGST law is about. So therefore, for exam or basically to learn the GST law, we don't have to refer to all the acts. What we need to refer to is CGST act plus few sections of IGST act. Clear? Understood? So that is about this statutory reference here. And look into page number 9. Look into page number 9. From foreign territory to a state, when we import, we need to pay IGST. From the foreign territory to a state, when we import goods or services, we need to pay IGST. But in case of goods, we have customs duty along with IGST. Why we need to pay IGST on import of goods? Anyhow, import of goods is a subject matter under customs. But why we need to pay IGST on import of goods? Can you answer this? Very good, sir. So, as CVD and SAD got subsumed into GST, in the place of CVD, SAD, we have GST. So, due to that reason, so along with customs duty, we need to pay IGST. So, on import of goods, boss, we basically pay basic customs duty, IGST, and something called as social welfare surcharge. Social welfare surcharge also we pay, okay. And we have additional customs duties like anti-dumping duty, then anti-subsidy duty, safeguard duty, like that we have. So, these are the various duties that we pay on import, okay. So, say this, import of what? Import of goods. On import of goods. So, whenever we make import of goods, you can just write down there, on import of goods, so we will be paying basic customs duty. Basic customs duty we pay. And then social welfare surcharge. Social welfare surcharge. And then we pay IGST, okay. Then additional customs duties, So, these are the 4, different customs duties that we pay on import of goods. On import of goods, we pay basic customs duty, social welfare surcharge, IGST, and additional customs duty. So, why there is IGST? Because CVD and SAD was levied under customs, which got subsumed into GST. So, in that place of CVD and SAD, we have IGST. So, on all import of goods, we have to pay IGST along with customs duties, okay. So, basic customs duty will be there, then social welfare surcharge is there, then IGST is there, and even we have additional customs duties. These additional customs duties, there are various additional customs duties here. Something called as anti-dumping duty is also additional customs duty. What is this anti-dumping duty? Whenever you are importing goods at a cheaper rate than the price in which it is being sold in that country, they are trying to dump the goods into India, which will cripple the domestic market here. So, in order to avoid that, so they will be adding some extra amount to the imported goods, that is known as anti-dumping duty. Dumping is what? What is generally dumping means? Throwing something. So, the foreign country would have manufactured lot of goods which will be thrown into India at a cheaper rate, and because of that the domestic industry in India will get will get anything? No, because in the sense like no one will go for the domestic product. So, then gradually what will happen? So, the dominance of import will increase. So, then there won't be any domestic manufacturer. Now, whatever price that the foreign country says, then we have to buy at that rate only. So, that is not good for a economy. Due to that reason, an anti-dumping duty is levied. Same way, China is giving lot of subsidies to manufacturers in their country when they are exporting the goods to India, because it's a trade war. Usually China is known for a trade war for quite a long time they are doing. Now only they entered into bio war. Before that it was a trade war. So, in that trade war, what they used to do is that you are going to export to India, yes, then you will get the subsidy. So, the government will give subsidy to the manufacturers over there. So, because of it they will be selling to India at a lesser price. So, then here we will be adding some anti-subsidy duty and we will inflate the product, like increase the price of that product. Then safeguard duty. Safeguard duty is like because of the large exports, large exports from that country to India, means we are making large imports in large quantities. Imports when we are making in large quantities, then again domestic industry will suffer. For that reason they will be levying something called as safeguard duty to safeguard the domestic industry. So all these are like additional customs duties. More detail about that we will be learning in types of customs duties chapter. Okay. The objective of this first chapter is introduction to GST is we need to know about the basics of everything, and the details of that we will be learning in the subsequent chapters. Okay. Then whenever the supply takes place within the state, then what is that supply known as? Intrastate. So what will be the GST, CGST and SGST, and from one state to another state is known as interstate, IGST. So then again one state to union territory, again it will become interstate, IGST. Within union territory it will be CGST plus UTGST. From union territory to foreign territory it is known as export. Again in case of export we will be coming across IGST. Okay. So tell me when there will be applicability of IGST. Three cases. Number one, interstate supply, imports and exports. Clear? IGST will be applicable in three cases. Number one, interstate. Number two, import. Number three, export. In case of import, we will divide that into two, import of goods and import of services. On import of goods, we need to pay customs duties plus IGST. On import of services, there will be only IGST. Same way, on export of goods, there will be customs duty as well as IGST, whereas on export of services there will be only IGST, because import of service and export of service is not a levy under customs, but import of goods and export of goods is covered under the levy under customs. Due to that reason, along with IGST, customs duty reference also will come. Is it clear here? Now usually export of goods or export of services will be known as zero rated supply. Have you come across this wording, zero rated supply? What is it zero rated supply means? Rate of GST is 0. Is that called as zero rated supply? No. If the rate of GST is 0, it is called as nil rated supplies. Then what is zero rated supplies? There is a rate, but we will get the refund of the GST paid, so the tax burden will become 0. So that's why it is known as zero rated supplies. Again I am repeating, listen. Whenever we make a zero rated supply, there is a rate for that product, but the tax incidence or the tax burden is going to become 0 because we get the refund. Whatever tax we pay, we will be getting the refund. So then the tax incidence will become 0. That's why it is known as zero rated supply. Is it clear, pa? Now that zero rated supply we are going to discuss now. So look into where is that? Page number 10. Page number 10, you can see import and exports versus GST. In this, I just gave you this. On import of goods, we need to pay basic customs duty, IGST and social welfare surcharge. Clear? Apart from that, additional customs duties also we need to pay. On export of goods, we need to pay, if it is exempted under customs, we don't have to pay customs duty, and IGST depends because it is treated as zero rated supply. Same way, if it is dutiable under customs, we will pay basic customs duty. But why I have made it as nil in case of IGST? Because it is a zero rated, burden will not be there. Why burden will not be there? There are two options available to a person who is making zero rated supplies. Zero rated supply is defined under section 16 of IGST Act, which says export of goods or services or supply of goods or services to SEZ is known as a zero rated supply. So what are zero rated supply? Can you tell me? Export of goods or services, supply of goods or services to SEZ is known as zero rated supply. There are two options available for a person who is making zero rated supply. Option number one, we will pay IGST. We will pay IGST on export or supply to SEZ, and for payment of that IGST, we can use the input tax credit balance, whatever credit that we have. What is input tax credit? So that is GST paid on inward supply can be taken as credit and adjusted against the GST payable on outward supply, that is known as input tax credit. So we have the system of credit in GST, so which previously you would have studied in VAT. You studied VAT at least? Yes or no? Yeah. So in VAT it was there, and that they have brought into GST. So what is this system of credit means? System of credit means tax paid on inward supplies can be taken as credit and adjusted against the tax payable on outward supply. That is known as the system of credit. Okay. Now, when I am making zero rated supplies, I will pay IGST. To pay that IGST, I will use the input tax credit whatever I have and adjust with the liability. Now I will get the refund of the gross IGST paid. So therefore, the tax incidence will become zero. How? For example, you can see an illustration below. ABC Private Limited is an exporter engaged in export of finished goods for the month valuing rupees 8 lakhs excluding GST at 12%. They made the following purchases during the month: inputs, input services and capital goods. These three things are purchased by them. So 1 lakh excluding GST at 12%, 50,000 excluding GST at 18%, 1 lakh 50 excluding GST at 12%. So these are their inward supply. Inward supply means what? Purchase. Inward supply means purchases. So they made a purchase of inputs, they made purchase of input services, and they have purchased capital goods. Capital goods means machineries, etc. they purchased. On that they paid GST. Now, can this GST paid be taken as input tax credit? Yes. And what they can do with that input tax credit? They will adjust with their liability. They will adjust with their liability. Compute the amount of refund under both the options. And what will be your answer if export turnover is 5 lakhs and domestic turnover is 3 lakhs? That's a different question. Okay. So now, first in this case, option 1 part. Please concentrate, everyone, listen. Option 1. What is option 1? Pay IGST on export. What is the export value? 8 lakhs. What is the GST payable on 8 lakhs? 12% of 8 lakhs, 96,000. So you have to pay 96,000. How you will pay 96,000? How you will pay 96,000? Fully out of your pocket you will pay? No. You have a input tax credit. You can adjust that input tax credit. What is the input tax credit that is there? Come on. 1 lakh into 12%, 12,000. 50,000 into 18%, 9,000. 1 lakh 50,000 into 12%, how much? 18,000. So you have some input tax credit. Using that input tax credit, you will pay your liability. Is it clear here? Understood? Now, what is the net GST payable? What is the net GST payable? 57,000 is the net GST payable. Now, gross minus input tax credit, net GST payable, you will get a refund. Okay. So first, can you tell me what is a gross? 96,000. What is the input tax credit? 39,000. So what is the net amount? 57,000. So now, how much refund you will get? 96 or 57? 96 you will get as a refund. How, sir? How you will get 96,000 as a refund? What is the logic in that? First listen. At the time of purchase, how much you paid? 39,000. That would have reached government and that is your burden, correct? That will be given as a refund to you. Plus, on sale, how much you are paying out of your pocket. So that also you'll get as a refund. So 39,000 what we paid on purchase plus 57,000 what we are paying on sale, both put together how much? 96,000 will get as a refund. So what is your tax incidence? 0. How 0? At the time of purchase you paid 39, are you getting refund of that? At the time of sale you are paying 57, are you getting refund of that? Then what is your tax burden? 0. Okay, that's why it is known as 0 rated. Okay, so please take your notebook. Are you maintaining any notebook? Okay, so you maintain a notebook. A small one is also okay. And whatever questions, I have given lot of questions in the book. The answers for that questions you will be making note in your notebook. Plus any extra points you will be writing. Okay, majority I have given, but any extra points or answers to the questions etc. you will write in your notebook. So maintain a separate dedicated notebook, and whenever you are free give the page numbers to that notebook, and that relevant page number you write in this book, so that this book will be the reference for you. Okay, clear? So first you write down answer to illustration in page number 10. Answer to illustration in page number 10. So there are two cases given in the question. Case 1 is what? Case 1, if there is export, if there is export turnover, there is no domestic turnover, only export turnover. Option 1, what is option 1? Pay IGST and get refund. So what is your gross liability here? Gross GST payable. Gross GST payable on what? Outward supply or inward supply? On outward supply. Gross GST payable on outward supply. That gross GST payable on outward supply will be 8 lakhs only, no? 8 lakhs into 12%. 8 lakhs into 12%, that is 96,000. Minus input tax credit. What is this input tax credit? Nothing but GST paid on inward supply. GST paid on inward supply. What is the GST paid on inward supply? First, we have inputs. Inputs ka value is 1 lakh. 1 lakh into 12%, that is 12,000. Then input services. Input services, the value of input services is 50,000. 50,000 into 18%, 9,000. Capital goods. Capital goods is 1,50,000. 1,50,000 into 12%, that is 18,000. Now when you deduct this from the gross liability, the net GST payable, will be 57,000. 57,000. And what is the sum of these three? 39,000. So what will be the refund? Refund equals to, first, on inward supply you paid 39,000, that you will get as a refund. First, out of your pocket you paid IR, on inward supply 39,000, that plus on outward supply how much you are paying? 57,000. Out of your pocket you are paying 57,000. So that will be nothing but the gross liability 96,000 you will get as a refund. So what will be the tax incidence? The tax incidence is 0. Clear? This is option 1. So can you tell me what is option 1 in case of 0 rated supply? Pay IGST on outward supply by using credit balance as well as cash, and then you will get the refund of gross IGST. Then you will get the refund of gross IGST, so that the tax incidence will be 0. This is option 1. Option 2, you please read. What does option 2 says? You don't have to pay IGST. You can read there. You can see there. Can you find the table? No need to pay IGST on outward supply. Don't pay IGST on outward supply. And get refund of what? GST paid on inward supply. That is input tax credit you will get as a refund. So then also the tax incidence will be 0. How? On sales I am not paying anything, boss. On purchases whatever I have paid I am getting as a refund. So that is about option 2. But in option 2 we will not get the refund of GST paid on capital goods. Only with respect to inputs and input services we will get the refund, not in case of capital goods. Why? That's how the law has been made. I am not creating this. Already someone who created, I am just conveying you. That's how the law has been created. They are telling you will not get the refund on capital goods. You will get the refund only on inputs and input service. Sir, what is this capital goods? What is this input, sir? Simple pa. For the first time in indirect tax law, they made a simple definition. That is, in past and all, meaning of inputs, meaning of capital goods was so confusing. Now they made it very clear. What is capital goods? Any goods purchased and capitalized in the books of the recipient is known as capital goods. If it is charged to P&L, it is known as inputs. Superb definition. So now we will not poke into the accounting policy. Got it? In GST law, we will not poke anywhere into the accounting policy. Why it is capital goods? Why it is inputs? Why you capitalize? No. Let the statutory auditor take care. So let the statutory auditor take care on the matching concept, why you have capitalized it or why you have charged it to P&L. So why GST law has to interfere? Will you agree with me? So for GST law purpose, simple. You purchase some goods, capitalized in your books, that will be treated as. And you purchase some goods, charge it to P&L. Inputs. For example, we purchased the AC, camera, computer, it will come and it will be capitalized in the books or charge it to P&L. You tell, as a statutory auditor, you should tell, capitalized or charge it to P&L. So it will be treated as capital goods. And we purchase batteries or books, etc., papers, etc. We purchase stationery items. Capitalized or charge it to P&L. Therefore, it will be coming under inputs. Simple. So therefore, depending upon the business, you decide what is inputs and what is capital goods. But in case of zero rated supply, you will not get the refund of ITC with respect to capital goods. You will get the refund of ITC only with respect to inputs and input services. That's how the law has been made. Okay. So now option 2 we are proceeding. So you write down option 2. Option 2 is don't pay IGST. Don't pay IGST and get refund of ITC. Get refund of ITC. First, what is the refund that we will get? Refund equals to maximum refund equals to, a formula has been given in the lawyer, net ITC into zero rated turnover divided by adjusted total turnover. Adjusted total turnover. This is the formula given in the law. So maximum refund equals to ITC, that is proportionate ITC pertaining to zero rated turnover. Proportionate ITC pertaining to zero rated turnover, but this net ITC will be with respect to what? Inputs and input services. With respect to inputs and input services. Net ITC into zero rated turnover divided by adjusted total turnover, and that net ITC is with respect to inputs and input services. So can you tell me what is the ITC with respect to inputs and input services? Already we have done in the previous table computation, 12,000 plus 9,000. 12,000 plus 9,000. And what is the export turnover, that is zero rated turnover? 8 lakhs. 8 lakhs. And what is the total turnover? 8 lakhs. Correct? Do we have domestic turnover? Please check the question. Please check the question. Do we have domestic turnover in the first case? No. Fully it is export turnover. So 8 by 8. So therefore, how much refund we will be getting? 21,000. And still, what is the balance in ITC? Balance in ITC after refund. What is the balance in ITC after refund? 18,000. How 18,000? Total ITC how much? 39,000 minus how much refund you got? 21,000. So still there is a balance in ITC of 18,000, which is nothing but pertaining to capital goods. And whether we are paying any GST on outward supply? No. The option itself is no need to pay GST on outward supply. Now here also tax incidence 0? Yes. How tax incidence is 0? Whatever we paid on inward supply, we are getting either as refund or it is in the form of ITC, which we can adjust against the liability. But tell me, which option will you prefer? First option. Why first option? Why first option you will prefer? No, those who supported a first option, I want the answer from you. Why you are supporting first option? Huh? That is, you are getting the cash, correct? So 57,000, that is 96,000 you are getting as cash, whereas here you will get only 21,000 and still 18,000 is in the form of credit. So this credit we can adjust only in future against our liability, but here entire amount 96,000 we can use for any purpose, because refund will be in cash, that can be used for any purpose. We can buy raw material or we can use for our expenses, whereas here this 21,000 only we can use, remaining 18,000 will be still there in the ledger as credit balance, which we can adjust only against our liability, and being an exporter we will never have the liability. So this will get accumulated and we will not be getting benefit out of that, correct? Is it the reason you supported? Yes or no? Yes? Okay. But in your decision, have you also taken the possibility of interest, because you are going to pay 57,000 and wait for the refund? You understood? Do you think today you pay, tomorrow you will get? No, come on, we are dealing with the GST law, GST department. The statutory time limit itself is 60 days. 60 days from the date you make the application is the statutory time limit to give the refund. If they are not giving refund within 60 days from the date you make the application, from 61st day onwards they are going to give you 6% rate of interest. 6%. But when you pay 18% only you pay. When you pay the interest to government, just 18%. When they are giving 6%, they are going to give to you. But to when? After 60 days. For that 60 days, you will not get any benefit. Time value of money needs to be considered in this option. Clear or not? So if you have credit with respect to capital goods, you should go for option 1. If you have credit with respect to capital goods, you need to definitely go for option 1, but the disadvantage in option 1 is we need to pay and we need to wait for that refund. So there is a time value of money that is involved. Whereas in option 2, if you don't have the credit with respect to capital goods, 100%, which option is best? Option 2 only, because we don't have to pay any GST on outward supply. Whatever we paid on inward supply, we will get as a refund. You understood or not? So depending upon the type of the taxpayer, so they can choose option 1 or option 2. That's why they created 2 options. That's why I gave you the explanation. Otherwise, you will ask me that doubt, why 2 options, sir? Okay. So reason, depending upon the situation. You have credit of capital goods, go for option 1. And you don't have credit of capital goods, go for option 2. And you are prepared to incur the time value of money cost, so then you go for option 1. You don't want to take that chance, then go for option 2. It's up to you. Got it? Now, case 2, I want you to try. Come on. Case 2, if there is both export turnover and domestic turnover. Case 2, if there is both export turnover and domestic turnover. If there is both export turnover and domestic turnover. Option 1. Pay IGST and get refund. Pay IGST and get refund. So what will be your gross liability? So gross liability, so first we have export turnover, what is the export turnover? 3 lakhs or 5 lakhs? 5 lakhs. 5 lakhs into what is the rate of GST? 12%, that is 60,000. And domestic turnover 3 lakhs into 12%, that is 36,000. So total will be 96,000 minus input tax credit. What is that input tax credit here? Already we calculated, that is 12,000 with respect to inputs, 9,000 with respect to input services, and 18,000 with respect to capital goods, correct? So total 39,000, and what will be the net liability? Same, 57. Yes. Now what will be the refund that you will get? Refund of IGST 96,000? No. If it is same answer, then I would have copy pasted. No. So we will not get 96,000. We will get 60,000. That is GST on export turnover. What is the GST on export turnover? So refund of IGST is only 60,000. Refund of IGST is 60,000. Why sir we are getting only 60,000? Because we have domestic turnover. On the domestic turnover, whatever GST we paid, we will not get. Only with respect to export turnover, whatever GST we paid, that only we will get. Okay. Then option 2. Option 2 is what? Don't pay IGST and get refund of ITZ. Get refund of ITZ. So what is the gross liability? What is the gross liability? 0, correct? Very good, 36,000. It's not 0. Why it is not 0? Because there is domestic turnover. For export turnover only no need to pay GST, but for domestic turnover we need to pay GST. So gross liability with respect to export turnover, it will be 0. With respect to domestic turnover, how much here? 36,000, no? 3 lakhs into 12%, 36,000, and we have input tax credit. How much input tax credit we have? Input tax credit. How much input tax credit we have? 39,000. How 39,000? 12,000 inputs and 9,000 input services, 18,000 capital goods. So we will use 39,000. So which means our net liability will become 0. Why net liability will become 0? Because we have excess credit. We have excess credit for payment of our liability. Our liability is only 36,000, but we have an input tax credit of 39,000. So the net liability will become 0. And what is the balance in ITC? Balance in input tax credit, that is 39,000. We would have spent 36,000. So still what is the balance in input tax credit that we have? 3,000. Clear? Can you do the refund formula? What is the maximum refund? What is the maximum refund formula? Can you tell me? Net ITC into what turnover by what turnover? 0 rated turnover divided by adjusted total turnover. 0 rated turnover divided by adjusted total turnover. What is the net ITC? Net ITC is 21,000. Why net ITC 21,000? Only with respect to inputs and input services, not with respect to capital goods. Into what is the 0 rated turnover? Check the question. 5 lakhs divided by what is the total turnover? 8 lakhs. So what is the refund? How much? 13,125. So tell me what is the total refund that you will be getting? How much is the refund you will get? 13,000 is a wrong answer. 13,125 is a wrong answer. That is not the refund. Sir, you only said maximum refund. I said maximum refund. I did not say refund. That is a formula. As per formula, you will get 13,125. But tell me how much refund you will get. Think. The answer is before you only. Think. Let's see who will get the correct answer. Answer is in this place only. That is, you can see the computation, you will get to know. No. Huh? Who said 3,000? Correct. Because that much balance is only there. You have an ATM card. You can withdraw 10,000 in a day. You go and swipe. Money is not coming. Why? First there should be balance. Then only you will get. Even though you are eligible for 13,125, what is the balance in ITC? See darling, what is the balance in ITC? 3,000. How much refund you will get? 3,000 only you will get. Therefore, refund equals to 3000. Why 3000? That is balance in ITC. Balance in ITC. What they will give you refund? The input tax credit they will give refund. Already input tax credit you have spent. How much you have spent? 36,000 you have spent. So then how much you will get as a refund? Only 3,000 rupees you will get as a refund. Again I am repeating. So actually the logic is simple here. So 39,000 you will have input tax credit. 39,000 you will get as a refund. When you will get 39,000 as a refund, that much balance should be there, then only you will get a refund. So here out of the 39,000, already 36,000 you are using for your domestic turnover, correct or not? Then what is the balance left in the credit ledger, that is input tax credit, only 3,000. So that much only you will get as a refund. So therefore refund here, that maximum refund is only the formula. As per formula you will get 13,125, but if you have that much of balance, you will get. If you don't have the balance, you will not get. You got it? So now, in this case, which option is best? Here, how much you are paying? First on inward supply you are paying. 39,000. On outward supply you are paying 57,000. So 39 plus 57, how much? 96. How much you got as a refund? 60. So that 36,000 is anyhow your liability that you are paying, correct? Whereas here, how much you are paying? On inward supply 39. On outward supply, how much you are paying? 0. So out of the 39, how much you got as a refund? 3,000. So which means what is your tax burden? 36,000. So both options are same. Is it clear? Both options are same. So the tax incidence will be same under both the options, 36,000 and 36,000 only. So therefore, here option 1 and option 2 will not give you different answer or will not give you different benefit. So both options will be giving the same conclusion, that the tax incidence will be either 0 or the tax incidence will be equal to the liability on domestic turnover. Okay. Any doubt in this here? You understood the answer for this? So can you please tell me what are the two options available in case of zero rated supply? Come on. Option 1, pay IGST either using credit balance or cash and get refund of gross IGST paid on zero rated turnover. Option 2, don't pay IGST on zero rated and get the refund of ITC. Get the refund of ITC, but the refund of ITC is subject to a formula. What is that formula? Net ITC into zero rated turnover by adjusted total turnover, and that too there should be the balance in input tax credit, then only you will be getting. So this is some basic idea about zero rated supply, how the refund works. Now in detail related to this, we will be learning in refunds chapter. More and more nitty-gritties, the other aspects, etc. So we will be learning in refunds chapter, but this knowledge is required as we progress. So for the next few chapters, so this knowledge is required for you. That's why I discussed in the beginning itself. Okay. So this much basic knowledge you need, and that is sufficient. But more detail about that we will be learning in refunds chapter. That is one separate chapter. Okay. Then, so we understood about zero rated turnover, exports and imports, how it is going to have an impact. Now, one last area for today's discussion, that is, we have come across how GST form and dual GST model and Gst Council, role of Gst Council, then types of GST, and from the types of GST we also discussed import and exports, how it is going to have impact in GST, that is zero rated, on import what taxes we need to pay, etc. Now, what are the goods that are covered under GST and not covered under GST, we are trying to understand. So have you come across this, that on alcoholic liquor for human consumption there is no GST? No, you know that on liquor there is no GST. Why there is no GST on liquor? Because right from the beginning in Constitution, 7th schedule to the Constitution. So 7th schedule to the Constitution has 3 lists. List 1 union list, list 2 state list, and list 3 concurrent list. List 1 where central government is having power to make law. State list where state government is having power to make law. Concurrent list where both central government and state government is having power to make law. In that list 2 state list, alcoholic liquor, tax on alcohol is kept in that state list, including the tax on agriculture. The tax on agriculture is also not in the union list, it is in state list only. Same way, even tax on alcoholic liquor for human consumption is also in the state list, because so this democratic India, when it formed after Britishers have left and the Republic India was made, so Mahatma Gandhi ji never wanted alcohol to be sold in India. Because he is against liquor consumption. So he don't want that to be in India. But the people surrounded by him said definitely that revenue is required for functioning of the governments over there. So therefore we need to continue. But at the same time, so let's give it to the autonomy for the states. Let the states decide. So why we need to interfere into that? That's where in the beginning itself, in the constitution, it is made clear that so central government do not want the tax on alcohol because they don't want to encourage alcohol consumption in India. That was the basic reason why in the constitution it was kept in state list. Means from day one on alcohol, entire revenue was going to state government only. And state government will be levying excise duty, state excise duty on manufacture of alcohol, and central sales tax and value added tax on sale of alcohol, but entire money will be going into their pocket only. One drop also they will not share with central government. You understood? Fully it will be consumed by state government only. Now when GST comes into the picture, GST model is what? Dual GST model. Means CGST, central will levy 50%, state will levy 50%. Then on alcoholic liquor for human consumption, 50% revenue will go to, and remaining 50% will be with the state government. Already I told you, state don't want to share one drop also with central government. Now 50-50, sharing not allowed, full they want to consume. You understood? No sitting and all. Okay. So only individual, single they will consume. So then in that case, so what they said is that bring out the alcoholic liquor for human consumption outside the ambit of GST. We don't want that to be into GST. That's where in the constitution itself, it is a carving out created for this alcoholic liquor for human consumption. Even they have ensured that in GST law, section 9, subsection 1 of CGST Act says that on alcoholic liquor for human consumption, there is no GST. However, the old indirect taxes continue to be levied on alcoholic liquor. Got it? Even though GST is there, still old indirect taxes is there. On alcoholic liquor for human consumption, what are the old indirect taxes? State excise duty, central sales tax and value added tax. Okay. But sir, if it comes into GST, it is good? No, it is not good, because if it comes into the GST, the revenue from sale of alcohol will be less. If it is there in the old indirect tax itself, the state government will get more revenue. So let that be into the outside the ambit of GST. Okay. But that should not be understood in a different sense, that on medicines there is GST, but on alcohol there is no GST, and that should not be conveyed in a wrong manner, because state excise duties, the existing state excise duty, central sales tax and value added tax are more than GST. So GST, the maximum rate is 28%, but on alcoholic liquor, so many states are levying 33%, 40%, some states are levying even 50%. States like Andhra Pradesh is levying 50% also. Okay. So because they wanted to create that revenue source. If it comes into GST ambit, the price of the alcohol will come down. So that is not good. You understood or not? Without knowing all these things, one Tamil actor who is going to become future chief minister has commented that government is levying GST on medicines and they are not levying GST on alcohol. Okay. Basically the director of that movie don't know anything. He copy 4 or 5 movies and he will make one movie. Okay. So therefore he did not understand what is the repercussions of that statement, but he gave that statement and people have trolled him like anything, and central government also sent income tax raid to his home. Okay. So Therefore, on alcoholic liquor for human consumption, there is no GST, but the old indirect taxes will be continuing. Okay. So you can see that in page number 12. In page number 12, you can see. Alcoholic liquor for human consumption. So even after implementation of GST, see this is the position even after implementation of GST. So we need to pay state excise duty, central sales tax and value added tax. But there is no GST. Whether this exclusion is permanent or temporary? Permanent. In future, is there any possibility that alcohol will come into the ambit of GST? Never. It will never come into the ambit of GST. It is completely excluded. Then, petroleum products. Petroleum products also like that, but it is not because of the state list and all. It is because the state government wanted to increase their revenue at the cost of central government. Now you go and ask, petrol price has increased, no? Yes sir, because of Modi only. I really don't understand that if it is because of Modi, then it should be because of Stalin also. If it is because of Modi, then it should be because of the chief minister of that state also. Both are held responsible. How only one person can take the responsibility of that? I am not telling that central government is not reducing or they are good and all. I am telling that they are also doing the mistake and state government is also equally responsible. But this fact people will not understand. So you ask a common man, he will tell petrol price increased because of BJP only. Here your state also is there, your state also should reduce, but they will not listen. So this benefit which state will get? So the state is getting the benefit at the cost of central government. Blame is on central government, but state is getting benefit. So they don't want this petroleum product to come into the ambit of GST. Let it be outside the ambit of GST. But central government said, this we will not allow permanently. We will give a time frame and we want to bring it into the ambit of GST. 1 year before they made a proposal to bring it into the ambit of GST. States did not listen. They said, no, we need some more time. So what central government did? Okay, like that, fine. I will not reduce. I will not reduce. I will increase. I will not give subsidy. Previously, we were enjoying the subsidies on petrol and diesel. They said, we will not give subsidy then. Let the price go to 150 also. We are not bothered. Because you are not listening to us. You understood? Because of the Cold War between center and state only today we are facing the problem. You got it? Understood or not? Again, I am not talking about politics. I am talking about the policies. Okay. So, that is about this petroleum products. Is it coming into the ambit of GST? No. But will it come into the ambit of GST in future? Yes. Then until that point of time, what was the existing indirect taxes that are applicable? Central excise duty, state excise duty we don't have, but CST and VAT. Then tobacco and tobacco products not only covered under GST but also covered under old indirect taxes called as central excise duty. Why sir like that? What is our botheration? We are not smokers, no. So let them levy excise duty, duty on duty, tax on tax, like that anything they can levy. They can increase the price of cigarettes and tobacco products. Why we should bother about that? Let them increase okay. See, according to me, on that let them collect 500% also. We are not bothered. But on the basic goods, there should not be GST, there should be less rate of GST. Will you agree with me? So these are sin goods, let them levy. So therefore, constitutionally, they are being permitted to levy both GST as well as central excise duty, but there is no CST and VAT. Okay. So therefore, only one product which has both old tax as well as new tax. What is that? Tobacco and tobacco products. Then all other goods are not covered under old indirect taxes. It is completely covered under the ambit of GST. Now, out of this list, what are the two products which are not covered under GST? Alcoholic liquor for human consumption and petroleum products. These are known as non-taxable supplies. What are non-taxable supplies under GST? Alcoholic liquor and petroleum products. Why they are called as non-taxable supplies? Because they are not covered under the levy. They are not covered under the levy. So due to that reason, it is known as non-taxable supplies. What are those petroleum products, and more details about that we can see in the next class. Okay, and so today what we have completed is how GST form, dual GST model, and Gst Council, and types of GST, zero rated supply. We are into the discussion related to position of goods. Okay, so remaining we will continue from tomorrow, and tomorrow our class is from 2:30 to 8:45. Okay, so as announced, because many students have requested me that they have morning class, attending some other classes. So morning class means definitely morning class faculties will keep morning 6:30 to afternoon 1 and all for Sunday. That's why, you know, whatever balancing figure, last subject, no, so that I am taking. Okay, and don't worry, I will give you enough breaks. So when I am taking that long class, but daily class don't expect break and all. Hardly I get 2.5 hours only. That itself is not sufficient for me. But Sunday class I will give you good breaks. Okay, thank you. We will meet tomorrow.